Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Hi, everybody. Welcome to Digital Currents, our Friday recording. And Mark, we won't make this a regular ask, but maybe because it's the first time, how is the tooth holding up? There was a bold decision made, and hopefully it's been okay.
Yeah, thank you for asking. So step 2 took care of yesterday. So I unfortunately missed the big dinner you were at last night, which I'm sure we'll talk about. But I got the temporary crown. It was, so the short version of the long tail, went to Bitcoin, broke my tooth, came home. The guy's like, nah, we're going to yank it. I'm like, whoa, time out. Let's, maybe we could bond it and, put a cap on it or crown and then see how it goes. He's like, well, we could do that. So he did. And he did a great job bonding it, did a great job with the crown. Yes, I found out yesterday, actually, that he is the chairman of the department, right? UNC faculty, you work one day a week, you drill teeth on Wednesdays or whatever. His is Thursdays. So I was in good hands, but it's good. So thanks for asking.
Good.
And, we are the inverse today. So I got the yellow, although your shirt's yellow, I got the yellow tag. Blue. Yours is greenish, probably not blue, but it kind of looks like the inverse, or you actually match, the buy Bitcoin sign.
Very close.
And quick reveal, I went with an interesting theme today. So I got the usual, orange pants, but I have the Bitcoin Lightning socks. Well, why Lightning? Well, one, payments is become huge. Circle went public yesterday. Stock went crazy.
Oh yeah, they killed it.
That's stable coins, not Lightning, Mark. Well, I get it, but the whole idea that the network, right? This big digital network that is overtaking money, it's here. And also, if you open the weather app here in North Carolina, every day for the next 10 days is thunderstorms.
Oh no.
I usually don't travel in June because of that. Like you go to the airport, cancel all the flights. But anyway, so lots of lightning in the skies, all over the environment. And the Circle deal was just incredible.
So maybe we should jump into that, Mark, because that was part of the dinner I was last night. That was all the rage because IPOs, they haven't been that plentiful. So when we see them, there's a lot to talk about, good or bad. But I think with Circle, it was, not just good, but it was an overwhelming feeling of, we're due, quote unquote, right?
Yeah.
And it's so funny, Mark. I'll tell you a story. Back in business school, we had this very seasoned, I won't call him old, I'll call him seasoned, Professor Sexton for stats. And he was like, man, one thing that really gets me with statistics is just how infrequently they're correctly stated, like in the public eye or on television. It's like, take baseball, for example. It's like you've got a batter standing in the batting box and he's about to take a swing and he hasn't hit, he's probably 0 for 19. And then the announcer says he's due. And then he'd said, but if you do the math, he is not, right? So, so when we think about the IPO market, I keep saying that we're due, but if you look at the math, we're still kind of maybe not. But with Circle, what was interesting, Mark, is I think that this is a broader macro debate, which I'd love to have you weigh in on this, because if we look at Circle, it's what is it? It's a large stablecoin company that's been around for a very long time, very well known and trusted, right? I think that's kind of the key part.
Yeah.
And so, why do stablecoins do well? We've covered it many times. It's an ability for folks to very frictionlessly move around a digital version of fiat, their fiat of choice, usually USD, and have low fees, potentially, have a little interest-bearing element. And the reason that interest-bearing is important is because we're in a very high inflationary environment where something like a stablecoin should thrive. because we still have a lot of friction, and now so more than ever when we talk about moving things cross-border. And so, there is this dichotomy that's brewing, right? Where U.S. has been very clear. We don't want a central bank digital currency, no CBDC, but we're going to support stablecoins, which help our currency. And yet that growth of Circle, you got to think if interest rates start to decrease, which we're not thinking that's going to happen anytime soon, could that challenge the pervasive use of stablecoins? It's kind of two different paths, right? It's like, do you want the frictionless or do you want the interest bearing? Do people go to other assets?
I mean, yes and yes. And here's the thing. Look, great stat I heard yesterday. So, Circle goes out at, I think it went out at 5 billion and surged to 16 billion, which, Garlinghouse tried to buy Circle, right? At some crazy number. And then he upped it. And I think he did up it to like 16. So now so at least he had the right value. But someone said that for the year, Circle makes profits equal to 4 days at Tether.
Wow.
So if Circle's worth 16 billion, how much is Tether worth? And Tether has like 80 employees, if that. I didn't even sure.
Yeah, and the capital structure, we know that, Mark, on their cap tables is super interesting, right? It's like they've raised very little money. It's basically controlled or owned by like two individuals, right? It's super concentrated.
Oh, yeah. Yeah. Well, and except now, Howard Lutnick owns a little bit through it,
Conspiracies abound. Here we go, right? Because it's one of those things where if we learn any lessons, Mark, obviously we're now into the triple digits of our episodes on digital currency. So we can go back into the archives and pull things out and look at trends through our own metadata that we've created on the show. And so, one of the things I was perusing in my free time is that we spoke a lot about what happened in kind of the great unwinding or the great collapse. Right around that FTX period, there was a lot of things that started happening. It wasn't just that. And we rehashed this over the dinner, which, one of our portfolio companies, I'll give him a shout out, Hartman Capital, Felix Hartman, had a great event for us in New York in the backyard. And, for me now, Mark, every time I go into the city, it's an event. I have to plan where I'm going, how long I'm going to be there, when I come back. And, I love it at this phase of my life. And so when we were there, we were kind of now recapping some of the history, because when you're at a point, let's call it a summit, and let's call the Circle IPO. I hope it's not the final summit, but it's a part of this mountain range, which we'll see. You look down and look back, and so when we think about some of the unwindings in kind of the collapse, we look at the Terra Luna fiasco, right? And kind of what have we learned from that relative to where we are here, right? And some people have a little bit of amnesia. And, we don't want to talk about that. We don't want to, get this moment kind of blurred. But they're important learnings, right? And the thing that you mentioned about obfuscation is critical. And then we can kind of think about, were there any coordinated attacks? Were there hedge funds involved? That's the fun stuff that will continue.
Well, look, the Terra Luna, right? The algorithmic stablecoin.
Oh, God.
Yeah, like, terrible. What does that mean? You're either backed by cash and treasuries and gold, or you're not.
Yeah.
And this idea, no, we have an algorithm that we can own Bitcoin, like an 80 vol asset backing a stable coin, really? And so the fact that, and I shouldn't pick on Novo, but and congrats to Novo, right? They got listed on NASDAQ,
they're back. They did the boomerang.
It's a huge deal, and their stock's gone crazy. And Novo's built an amazing business. But the fact that he had a Luna wolf on his tattoo, like a big one, not like a little, clover or something, but that people believed that was real, and it was never real. And it's just the whole word algorithmic stablecoin is just dumb. So the problem with Tether and the Tether truthers and the people who don't believe it is Paolo and the other guy won't really reveal all the details of what's behind. But the reality is, we do know some stuff, right? We know that they are eighth largest holder of U.S. Treasuries, something like that.
Yeah, we did this in the chart of the week yesterday, right, Mark, where they kind of did a little bit of I don't want to call it open kimono, but they were kind of like semi-revealed. Maybe they had a little bit of the blurriness on the screen, but they said that they had 120 billion in US T-bills. They had 100,000 Bitcoin. And I love this one, Mark, to show the legitimacy, 50 plus tons of gold, right?
Yeah.
So,
yeah.
That's definitely trying to, have a little bit of an effect, because if we've always said, what is digital gold? Okay, that's Bitcoin. But what is a stable coin? A stable coin is, frictionless, borderless payments that are T-instant, right? And so that's as good as gold when you need the cash, or in your case, when you're just trying to, do business in a way that is, normal, right?
But, and how can it be normal to take a week plus to settle a transaction, right?
Yeah.
And I've talked about this on the show before, that, my aha moment was the first time I used ETH in a MetaMask wallet to buy an NFT on a Sunday afternoon in my pajamas.
Love it.
Didn't have to wait for the bank to open. And people say, "Oh, what are you doing buying NFTs?" It doesn't matter, right? I mean, whether it was an NFT or whether it was a box of popsicles, it doesn't really matter what it was. The fact that I could buy it, that I could take ownership of something instantaneously, I say T-instant, and I didn't have to ask permission from anybody. I didn't have to wait for banking hours. And the idea that the whole world isn't going that way is just silly, right? This idea that, oh, now that we can do that, which seemed impossible before, that, oh, well, no, we're just going to stay in this old system. That can't be how the global financial system functions, but it is. And so this idea that companies like Circle somehow are just going to go away now because it's inconvenient for JP Morgan and Citigroup. And look, they did put down the first wave, right? The Celsius, the BlockFi, the Leaden, the Voyager, the
Three Arrows
survived. But those, what were those groups doing? Well, they were allowing people to take their fiat, convert it into stable coins or Bitcoin, and earn interest. What a novel concept. That's a bank. Now, you can't call it a bank because the banks get really bent out of shape. So it was a digital financial services company. And so through regulatory attack and the SEC kind of witch hunt, choke point 2.0, they basically got rid of those guys. And they went after Circle, right? And they went after Coinbase, but they didn't win. And they came at the king, and they didn't miss. And so now the funny thing is JP Morgan's like, well, fine. Customers, you want to hold this stuff? Fine. I still think it's a shit show, and it's like smoking. You shouldn't do it. Jamie, really? Smoking? I mean, come on. So anyway.
But I mean, there's so many threads we can go on, Mark, because I think one of the things that we do on our show, which I enjoy the most, is we have the right to change our opinion based on new data that comes in, right? I mean, that's just being rational, right? As opposed to being dogmatic. So we have kind of thought about, what is the next kind of alt coin? And there's two schools of thought. Again, I don't want to parrot too many of the ideas from last night, but it was a great conversation. You kind of have like two schools of thought, and not that one is right or wrong. You can guess which one I subscribe to pretty easily, but it's Bitcoin, the maxi argument, right? And there's really nothing else of value because right now the gulf between Bitcoin and everything else is as big as it's ever been, right?
Yep.
So
Bitcoin dominance is the highest it's ever been, yep.
Exactly. So in theory, in some folks' mind, the other argument is this creates enormous opportunity, either for Bitcoin or for everything else. Because if you think it's maxi, the world is going to increasingly become involved in digital assets, so more money will continue going to Bitcoin at the expense of everything else. But here's where we can change our mind. So the idea was ETH was supposed to be the challenge to Bitcoin, but it kind of went in the opposite way. Normally when Bitcoin goes up, ETH has historically gone up, but it hasn't really done so until very recently, right? So after Pectra, which we covered on the show, ETH has gone up 40%. It's still marked nowhere near its all-time high. Yeah. But when we're talking about things like Circle, the big beneficiary, in my opinion, has to be ETH, right? Because ETH has minted half of the total stablecoins in existence, right? So the market cap is 250 billion, but we had 27 trillion transactions last year. Yeah. So people are using the stuff. They're not just minting and burning and letting it store and collect dust like some of the Bitcoin. I'm sorry. I had to get that little chide in there. But Bitcoin is a store of value. It does something different, Mark, as we all know. So if...
It's such an important point, X, that... And they're not mutually exclusive. This is the part that does drive me a little bit crazy. I did an interview on Wednesday with somebody, and he posted it, and this guy came flying back at me. Oh, that's such a 2017 perspective. And I'm like, no. What I'm saying is, it's possible that Bitcoin has won the money debate. Yeah, there was a time when the guys at Bankless and others were saying, no, ETH is money too. Like, well, no, it doesn't appear to be the case, right? Money, asset that exists in the absence of a liability, scarce. It looks like Bitcoin won that. But that doesn't, to your point, that doesn't preclude other digital development, smart contracts. I'm going to go on the record and say they're going to exist in the future, right? I mean, not a crazy statement, but this idea that smart contracts are somehow bad and somehow scammy. Now, there are plenty of smart contract tokens that are scammy, but there are plenty of scammy public stocks, and there are plenty of scammy bonds, and there are plenty of scammy, commodity hustles. And derivative products. So this idea that smart contract technology is just going to vanish, I think is kind of silly. Now, we don't know for sure if it's only going to be ETH or does Solana get a piece of that? It looks like they do. Does Sui get a piece? Well, they just got hacked, or did they get hacked, or did the exchange get hacked? The questions. But at the end of the day, the stable coins have to run on something. And back to my Lightning socks, look, the Lightning Network was this great idea that we're going to have L2 built on Bitcoin and with all this transactions. But it didn't scale, and it didn't get the developer activity. And so today it's kind of cute, but it's not even close. I mean, not like orders of magnitude different than like what you described with the ETH rails. And they can coexist. Like we can have a world where we save in Bitcoin, that it is the perfect savings technology, and it frees us from, the debt slavery that we're all, with the Twitter war with Elon and Donald. Although I'm not convinced that they're not like sitting next to each other,
it's a good debate, like which megaphone is louder, because normally like Twitter was built for the, for the kind of e-spat, right? But now, with President Trump owning his own social media, it's one platform talking to the other. So I sense a budding business opportunity here, Mark, in the bridge. So if there's kind of like a referee platform that can summarize all the spats between the platforms. But I mean, to your point, I mean, right now we're seeing kind of this shift begin to occur. And I think there could be multiple winners, because if we're thinking about an entire birth of an asset class, well, monopolies are very hard to come by now, post Rockefeller, Robert Baron era. They were, legacy institutions kind of are trying to accumulate these assets so they can continue forwarding what they're already doing, hence why Jamie continues to be dogmatic, although he changes his tune when it's convenient. But the digital natives, in our opinion, are poised to win because they are not bound by the legacy infrastructure and rails that make the transaction you described, the 1 week, it's an impossibility with something like a stable coin because you're dealing with, peer-to-peer, you're dealing with frictionless. There's no man in the middle. There's no man behind the curtain, to quote Wizard of Oz.
So it's truly amazing when you think about how profound the change is.
Mm-hmm.
And again, we've talked about it, and people have estimated that it's 7-ish trillion with a T. Remember, 31,710 years, $1 per second. Okay, 7 of those. So $7 every second for 31,000 years. That revenue for the banks and the insurance companies and the brokerages it's not going to go to zero, but it can go down a lot through these less friction or more frictionless rails and processes, and that's a good thing. Now, I understand if you're a JP Morgan shareholder or employee, you're like, that's not a good thing for me. I don't like that. But that's the way progress is, and if it's better for humanity, which paying less for necessities is always better, right?
Agree.
If you think about what it used to require to get your food 100 years ago, time, effort, resources, that was a big deal. Grocery store, awesome. Oh, but it's a terrible business, a 3% margin business. I'm like, so what? I mean, it's great for humanity. And yeah, maybe, but actually, I know a whole bunch of, I don't know them personally, but I know a whole bunch of billionaires who own, franchises of grocery stores. So it must not be a completely terrible business. It's the opposite of the old Bezos line. Yeah, we lose money on every transaction, but we make it up on volume. Here, you make money on every transaction, and you do make it up on volume.
Right.
So I don't know. I keep coming back to digital, right? Which is Morgan Creek Digital. Why did we change our name, and why did we create this entity, and why do we spend our time focused on the ABCDs? Well, what I like about that is it's foundational. Just again, this because I'm a biology guy, right? So ATC and G, all of life, 4 letters. It's kind of amazing when you think about it. Like, no, that's not, that can't be. Like, well, yeah, it pretty much is. Like, all of life, it starts with some, repeating code of these 4 letters. And I think the same thing is true in terms of the digital age. It will all revolve around the ABCD. And, the data, you said it, right? If we now have our own metadata in that we can go back and we can look at the transcripts of what we talked about and say, okay, that was pretty interesting. Let's talk more about that. Oh, that was really stupid. Let's apologize for that.
There are a few of those. And Mark, I should get to one right away before I forget. I said a couple of weeks ago, there was some story in Chicago about a tour bus that crossed one of the bridges. And I falsely attributed the opening of some of the sewage tanks of that bus to
Darius.
Carolina legend Darius, all of these from the South. It was actually the rowdy Dave Matthews Band, which is
much more believable because, Darius, he's a Southern gentleman. He would never do that.
That would be frowned upon. So I think that's one of the good things that we can look back. And I think one of the things we also frequently say is that, this is not a political show, but it is impossible to talk about our industry without mentioning what is happening in the broader sphere. So Mark, obviously on the conference that you attended before, we had the issue with the tooth, when you were there was a lot of, I don't want to say grandstanding, but there was a lot of...
No, say it. It was
okay, I'll say
absolute grandstanding.
And so, we saw that from the UK, but now it's gone all the way to the other side of the world. No stranger to being popular in South Korea. There's some days, Mark, I didn't know this, but in preparation for the show, that trading volume on crypto exchanges, domestic Korean crypto exchanges outpace their own stock market, which is just blows my mind. So
it does
change has happened.
Look, people don't really understand how how impactful Korea is
Oh yeah.
in everything, right?
Oh yeah.
Like the internet, which we're using right now. If it weren't for Korean innovation around broadband and adoption and internet penetration, they were the by far they were the first place to get to like 90% penetration.
Yep.
And they pioneered many, and it's because they have some unbelievable technology companies like Samsung and Hynix and others, and they have this innovative spirit and good education system and great math and science. And so all of that goes to this issue of it shouldn't be a surprise that they are leaders in digital assets. They did, remember when China banned Bitcoin?
Oh yeah. Yeah. That lasted all about 10 minutes before people figured it on their way.
Korea was like, bring it.
Yeah, exactly. They were the big winners.
Japan's credit, Japan too, like bring it. Like bring all that stuff here and we will host it and we'll tax it because we're smart that way.
That's right.
And so they're very, very good at early adoption. But I think you're going to talk about the president, right?
Yeah, exactly, Mark, because, here's an instance where there is finally, if only we focused on what we agree on as opposed to what we disagree, we can get so much more done. So that's why I'm going to spotlight South Korea, because they have crossed the chasm. Obviously, listeners will correct me in saying, but Xavier, there was a lot of political turmoil leading up to this. There was martial law, all of these other challenges. And I'll say, yep, that's absolutely true. But what was happening across the globe is typically, whether it's the UK or the US, there are, a small number of parties with kind of one, maybe two that are very pro digital assets, pro crypto. And then the other larger or powerful influential party is kind of against it, or at least heavily regulating it to the point where it barely resembles what the innovation is trying to do. In South Korea, voters actually had a choice between the pro crypto candidate or the pro crypto candidate, right? So both candidates were pro crypto. And guess who won, Mark? The pro crypto candidate.
The pro crypto candidate.
Lee Jae, so he supports issues like the stable coins being denominated in the Korean won, legalizing spot crypto ETFs, and allowing, this is the one that is close to us, shout out to Fairfax County, allowing the National Pension Fund to invest in cryptocurrencies. Mark, this is big. This is a big name democracy, leader in technology, advancing the crypto agenda. What say you?
Huge. No, it is huge. And it's an example of logic, right? It is logical for politicians, leaders, to look at the technological landscape that facilitates increasing the efficiencies of your economy, increases the opportunities for wealth creation in your economy, and integrates you into the global ecosystem. Okay? That's totally logical. Now, the fact that people do illogical things in politics, okay, that's fine. But whether it's, we talked about this last week, Nigel Farage at the Bitcoin conference saying, yep, what that Trump guy did, I'm doing that. So everything he said, I'm saying it, and maybe that'll get me elected at the next election in the UK. And there's a lot of people who are single issue voters about a lot of things, right?
Oh yeah, definitely.
The Catholic boy and a lot of my friends vote, one issue, that's it. And people have their, belief systems. And single issue voters in digital, particularly Bitcoin, they're very, very focused and they mobilize.
Oh yeah.
The thing about the digital life is movements happen faster. Like in the old days, if you wanted to be, let's go all the way back, in the 50s, you wanted to be a communist and you wanted to get other people to be communists, you had to go to your little secret hideout place and you had to invite people clandestinely with your little decoder ring. And if you got found out, right, they'd prosecute you. But you couldn't send an email. You couldn't post on a website. And so it was hard to create movements beyond, what they were spitting out at you through ABC, NBC, CBS, state-owned media, or state-sponsored media. It wasn't state-owned. It was owned in places like North Korea and Russia. But all that saying is now a movement can happen like wildfire. And again, if it's logical and it makes sense, more people are drawn to it. Now, there's also stuff that happens where it doesn't make sense and people are drawn to it. But what I actually really love about the digital age is the ability to have open dialogue and discourse in search of truth, which is, the good Jesuit kind of principles. That's what everything should be about, right? All conversation should not be to prove that you're right and the other person's wrong. It should be to learn from each other and have dialogue and debate in search of truth.
100%, Mark. That's the fundamental principle of what the scientific method is supposed to be. Because it's no longer that I have an opinion and I have some sort of research. If it can't be replicated and supported by somebody else who is agreeing to a certain set of principles, then it's going to be thrown out. And of course, one of the podcasts I will shout out, and if I can ever bring Neil deGrasse Tyson on this podcast, I will meet you, Neil, wherever you are.
That's right. Anywhere you want. We'll come on the road.
We'll be there. And so he was on his latest podcast, Star Talk, where they, talk about the universe. He was mentioning how there was an earlier theory of basically is the 100-year celebration, Mark, of the discovery of other universes, which is a crazy idea. We thought that it was just the Milky Way because that was our observable universe. But then we had advances in telescopes and microscopes, so we can see very far and very, very close. And so, through that and the collection of data, there were other theories that were quickly disproven based on bad data. And one of which was about, how quickly or other spiral-shaped galaxies. I won't go into too much detail and steal Neil's thunder. He could come on our show and explain it.
That's right.
I can.
Yeah, you can come explain.
But exactly. But the idea is there was a very renowned scientist who came to a very logical conclusion based on the data that he had, but he was later proven wrong because the data that he had was not able to be replicated. And he fell on his sword. He said, you know what? You got me. I had the wrong data. He didn't double down. He didn't grandstand. And this is exactly what should occur in kind of logical debate. But I'll kind of change gears slightly, Mark, and see if you've gotten any perspective on this, or if this is becoming a little bit more buzz-worthy in the local, North Carolina area, because there's some big news as it relates to infrastructure and big data. So Amazon has agreed to invest $10 billion in North Carolina to power AI and cloud infrastructure. And so this is going to focus in on Richmond County, and it's going to create, hundreds of high-skilled jobs. And, I'll give Carolina credit because on one of the builds that we do every year, which is one of my favorite things we do at the Creek, we go build homes for less fortunate in the holidays. I brought the family down and I kind of showed them what life in Carolina might look like, if they're curious. And so there is just a preponderance of, research-based universities, which lead to a lot of interesting things and ideas. And so putting in an investment in Carolina, to me, is a no-brainer because you have the talent there, you have the track record and the history of innovating. It's heavily in biotech, but I don't see a reason, Mark, why it can't expand beyond that, especially given the natural resources we so happen to discover there and no other place on Earth.
No, look, it's the whole thing about the the special quartz.
Oh yeah,
you need to produce semiconductors in Western North Carolina where the floods were. That's a whole other story for another day.
Oh yes,
North Carolina is really an interesting place for a lot of reasons. One, right, they call us the halfback state, right? Because people move from New York, New Jersey down to Florida, and then they move halfway back because it's just too buggy and hot in Florida. And here, we get all four seasons, but nothing extreme. It's beautiful. You got the beach, you got the mountains, you got the Piedmont. So it's a great place to live. Quality of life is super high. So a lot of companies are bringing, more kind of service, kind of back office-y, kind of, you got investment firms have their back office, people still in Boston doing the investing, but all the back office stuff, they're like, why would I pay Boston rent when I can pay North Carolina rent? And Amazon, did a search of the whole country and said, hey, we're going to bring our second headquarters to North Carolina. And they're like, well, okay, that's fine. We got a few office jobs. But hey, you guys have a history. Like, we won the largest grant for laying original fiber. So there's a big contract awarded, and there's a board that I sit on, Microelectronics Center in North Carolina, and they won it, and they've installed this massive fiber network, mostly for rural counties, to get people access to the internet. Long story short, so we have a lot of infrastructure here already, and Amazon's like going, all right, so you have familiarity, you have some people, but the real big one is the governor, a couple governors ago, passed a bill that would fund education at the community college level to train tech workers, right? The knowledge economy. And this goes to, I talk about the story all the time, that, when Trump was running the first time, he came down to North Carolina, because we were a swing state.
Yeah.
And he's like pointing at this woman, saying, I'm going to get your job back. And I'm like, no, you're not, right? She worked, past tense, at a textile mill that moved to China. That job's never coming back. They're never going to reopen the textile mill. They're just not. But you could send her to community college, retrain her to be a knowledge worker for the knowledge economy. And so what Amazon's doing is part of this big plan. They're adding some more funding to this community college program, because if you want to be a tech in a Amazon, data center, you don't need a 4-year degree in history. Not that I'm not saying a 4-year degree in history is a bad thing. I love history, but you don't need that. And I've talked about this on the podcast before. One of my favorite stories, because it's family. I have 2 nephews that they went to college and they didn't really like it, and they didn't do very well at it. And so they dropped. Now, the good news is that their stepdad had this business, this nascent little business that was kind of an interesting idea. He's like, someone needs to put those lines on the floor that the robots follow in the Amazon warehouses. And he kind of cornered that market. So he's built this amazing business. And so when Amazon puts up a warehouse, these kids go in and they put the tape down, and I don't need a 4-year college degree to do that. They don't need any degree to do that. And they're doing super well. Like, it's amazing how well, because the growth. And if you can train people to do the things that we need, right, which is we need people who can help the AIs code. Like, what do you mean, Mark? The AIs are going to do it themselves. AIs are really good at doing the code that's already been created, but it's actually not very good, we find out, at making the leap to applying it to other new ideas. It takes a human brain to make those leaps, at least now. Maybe someday we'll have better, but the ability to train people to use the tools in AI, in computing, and enable the creation of these, networks. We had an interesting, total non sequitur, but we had an interesting meeting with a company the other day that we're looking to invest in.
Yeah.
And it's a really pretty simple idea. They're like, well, if you think about a data center, you got all these servers and they're still connected with Ethernet cables. Yeah, like, really? I mean, okay. I mean, that to me seems like old tech, but okay, that's how they do it. And so they're like, well, we created a card. It was like literally one of those cards, like I remember getting those cards to plug in memory in my first computer, where I had to take the screws off and take the case, and you had to ground it, and you had to put these special gloves, and it was a pain in the ass. And if you did it wrong, the computer didn't work. Well, they have these cards that allow you to go orders of magnitude faster. And I'm like, really? Like, how? How are you doing that? And they're like, well, there's some chips and there's some software. It's mostly software. Oh, that's really interesting. So if you can teach people to code that software, that takes a really simple idea, which is expanding the pipe for Ethernet. And I've told this story before too, but the one that I'm always amazed by still is this little company called Akamai. Most people don't know what Akamai is. And Akamai is this multi-tens of billions of dollar business. The MIT professor, and I think I have this right. I think it was like 7 lines of code. So it's not like this big, it's just an algorithm. But what it did is it helped organize the way you move the packets around the network in the internet, and basically allowed the internet to not be so clunky and slow. And now the internet's pretty lightning fast, and like the lightning sucks. And, but it wasn't, it's just amazing to me that it wasn't, thousands of lines of code, and it wasn't, hundreds of people. It was just a couple smart people thinking differently and saying, well, that's illogical that you're routing it like that. Why don't you do it this way? And that's going to happen now in digital. It's going to happen in whether it's stable coins, right? Someone's going to figure out that, stable coins over this, smart contract. Well, what if there's a backlog of settlements and it breaks down like happens to Solana occasionally? Well, someone will figure out a patch with software or hardware, and we'll invest in both of them. So that process of investing in education, but targeted education, which was the purpose of my point, I think is the real mad genius part.
Yeah, well said. And I think it's really kind of I'll kind of credit a lot of this revolution to lockdown. Right, where we had all this time to be able to focus in on very specific things. And obviously the trend was well before lockdown, but I think that's when we all kind of picked up a new skill at that point. And it's hard to kind of close the door to being inspired to do something new. And if you can figure out a monetary incentive over the top, well, then it just makes all the sense in the world. I think we can kind of close out with our favorite section where we always view visually, because they say a picture, Mark, is worth 1,000 words. So a chart is a collection of pictures that's some multiple above that. Maybe it's 10,000 words. And, if we look at this growth in our industry, we kind of started with Bitcoin and we moved over to stable coins. What's next in terms of, let's call it the low-hanging fruit. I'm not even talking about exotic, ARB strategies or, semi-liquid staking or liquid staking. But real world assets is a topic that we have spoken a lot about on our show. And I want to kind of zoom in a little bit about, what's happened this year. And if we kind of zoom in for, I guess, 2024 and kind of where we stand now, how has the market been growing? And in particular, what constitutes that market? So I will share my screen and let me know when it pops up. And this is the time as well that I always remind the audience to check us out on YouTube. We have our stream available where we can see if we're matching what is the Bitcoin stock reveal, and of course the chart of the week where we will be showing pictures worth, let's call it 10,000 words for today. And that's where I'll settle. Okay, let me pick the right window. All right, so this one is from our friends at Cointelegraph, and this, Mark, let me know if it comes through on your end. The spoiler alert on this one for those that are on audio only: 260% rise in 2025, which is an astounding number. But of course, we are starting, Mark, in my opinion, from a relatively low bottom. I get excited by the percentages, but you've taught me a lot about chart crime, so I wanted to call that out right up front, because we're starting from this in this view in 2025, around like 15-ish kind of billion. But the broader trend here is real. If we believe in reducing friction in financial markets, I can't see a scenario where RWAs don't just become everything when it comes to represent some sort of monetary asset.
We've been saying this for years, and you had dinner with Felix and crew, Heart and Capital last night, and I did you and I went to his annual meeting down in Florida maybe 3 years ago, and there's a video where he was asking me a question, and I gave my pat answer that I've been saying for 7 years. Every stock, every bond, every currency, every commodity, every piece of art, every case of fine wine, every collectible car, every private business, everything will be a token. And when you say the word token, people think little gold coin, like no gold, no coins. It's a line item on a ledger, but not just like a paper ledger or not an electronic ledger hosted at AWS or Azure, but a permanent immutable network that is a superior form of organization of data and the ability to transact. And so every asset, private credit, U.S. treasuries, commodities, non-government debt, institutional alternative funds, stocks, all the things that we've talked about, real estate, and they're starting to grow. And, this is such a short period of time. It's only a year and a half that it's okay that it's not log scale, right? If you go anything over 5 years, you have to go log scale. It's like the chart that everybody's looking at of the debt. It's just such a stupid chart. It's 200 years and they show it without log scale. It's a meaningless chart. It makes people crazy because they're, oh my God, it's out of control. But remember, the first, 2 trillion took 200 years and the next 2 trillion took 4 years. I'm like, yeah, but 2 trillion from zero is very different from 2 trillion on top of 2 trillion.
No doubt.
It's just not a very big increase. I mean, it sounds big, the law of large numbers, but percentage-wise, it's just not that big an increase.
Yeah, and Mark, I guess another chart crime here, which I'm sure is one of your pet peeves because I know it's mine, colors.
Oh my gosh, this is a terrible chart crime.
So for those that are on the video, we apologize. Some of these colors are blending together like a tapestry of khaki pants because they're all kind of blending together. But I will call out one, Mark, in case it's not very obvious to see because it wasn't for me. I skimmed the article. But the top two categories, I think you're going to find interesting. So the top category of RWA that's been tokenized is private credit. So on the private credit side, it accounts for a massive percentage here. So followed by tokenized private credit is about 58% of this whole pie, and then followed by, I love this, tokenized U.S. Treasury debt. So it is blending perfectly your last image here. But this is something, Mark, that we spend now, not all of our time. We spend, still the majority thinking about digital, of course, but we're opening our minds to what is going on in the RWA space and how we can continue to add value to our investors, as well as educate ourselves with what will be the future. And tokenized credit, I mean, the numbers clearly show this is an upward trend, and we do not believe that this is going to be gobbled up by all of the incumbents, although I think Apollo has a fund here, and maybe there's one other, maybe Hamilton Lane, something like that, are like the kind of the two legacy guys, and then that's it, and then the rest are
it. And it's
new guys.
Maybe little Morgan Creek's going to get involved here.
Oh, absolutely.
In the sense that look, the big number there is a portfolio company, right? Figure has securitized a whole bunch of home equity lines of credit and mortgages, and then there are other people who have done debt instruments, and it makes perfect sense, right? If you go back to the old days, you literally had the bond, right? Think, Die Hard, the bearer bonds, and they had, it's called a coupon, right? Because at the bottom of the bond, there was literally these, like those hang tags that you see on the signs at the funky clubs that you go to, call this number if you want to be in a band. And you cut along the dotted lines and you handed the coupon and you got paid your interest.
Wow.
And so the paper, that was a pretty, not such a good system, but it persisted for, a couple hundred years. And then they're like, well, we could electronify that. We can keep the paper in Dallas, Texas at DTCC, and you can trade these QSIPs, these electronic alphanumeric codes, and we can credit you with the right amount of interest. Well, that is problematic because, again, why do we still have the paper? Why do we still have this alphanumeric? Why can't we do a digital, permanent, immutable representation that can be traded anywhere in the world across these digital lines? And that's what RWA, real world assets, tokenized assets are. So credit is a very logical place to start. The other reason is it's huge. Most people think, oh, stocks, that's the big market. The stock market's actually pretty small relative to the bond market, which is actually pretty darn small relative to the currency market, which is actually really, really small compared to the derivatives market.
Oh, yeah.
So there's a whole nother set of opportunities. And we're talking 25 billion sounds like a lot. It's like a thumbnail scratch of what's to come. And we're going to be talking trillions and trillions and trillions. And ultimately, every asset of the quadrillion dollars globally. So if you took all these colors and you made them actually better colors so they would,
oh yeah,
not
narrow colors. Yeah.
And you laid it out into a rectangle and you said, okay, here's stock market, here's the bond market, and here's the real estate market, and here's the securitization market, here's the derivatives market. It's a quadrillion dollars.
Mm-hmm.
25 billion out of a quadrillion is not very much. So all of it is going to be tokenized.
Yep.
And that's why infrastructure and companies like Circle and companies like Coinbase and even Strategy, Michael Saylor was up there saying, well, look, I'm going for it. It makes way more sense to own my pref or convertible bonds that are backed by Bitcoin and pay you a yield based on that than it is to invest in some private credit, secured by a bunch of trucks. So not that that's going to go away. You're still going to need to securitize the fleet of trucks. But he's got an interesting point that if I'm an investor and I can have my assets protected by this citadel that is Bitcoin. And what I mean by that, I mean in the sense that someone tweeted the other day that she bought 2 bagels and a cup of coffee and it was $32.
Oh my God. She must have been in Midtown Manhattan.
No, she was in Midtown Manhattan, right? And
I knew it.
$32, right? And you're like,
That's crazy.
No, that can't be. Well, it's not. It's not that the bagels are better. The bagels are better because of the water or whatever. I don't know.
Yeah. I mean, they've won that race. It's not even a competition.
It's not even a competition. I mean, the bagels are better. It's like Guinness in Ireland. It's a different drink. And so, okay, fine. But it's the money getting worse. And so if I can have an asset that doesn't change, whether it's gold or Bitcoin, and the money keeps getting worse, then the value of that asset is going to keep accreting. So if I have a securitization or tokenization of that asset, it's pretty interesting stuff. Now, today, all those things that Michael has, MSTR and Strike and Strife, all trade on the NYSE in normal DTCC form. They're coming here. They're all coming here. All of that is coming here into this tokenized network. Whether Jamie wants it or not, it's going to happen.
Yeah, and I think, it's a good point to possibly end. I'll drop a little nugget here of potential maybe things to watch out for on RWAs, Mark, as we close. RWAs have no dedicated regulatory framework, Mark, because they're considered securities by the SEC. And we have seen the growth of our industry come at great benefit by not being labeled security, because there's all sorts of different oversight that's required in registration and limitations for startups. However, we're in a moment now where we're benefiting from a lot of the new guidance, a lot of the new sensibilities of lawmakers that are very pro-crypto right now. Things like the Genius Act gaining momentum, and then the new favorability towards sensible regulation for things like staking. So there is this, I think the reason, Mark, we don't see this go absolutely parabolic is because of that gap. The gap between still considered, a security. We have this moment now in time, which is kind of the first moment where we're big enough to still be taken seriously, but are allowed to continue to grow. what happens in another 4 years? Will the horse escape the barn, or will there be another categorization? That's really the bet, and that's where you see the asymmetric inverse of risk reward. Or if you're right, well, then there's going to be an enormous windfall for those that play in this space, in my opinion. Yeah, and probably a good point to cut it there, Mark. And we will remind our listeners, as always, rate, review, and subscribe to the show. The engagement has been wonderful. We're going to continue bringing you more guests on the show. We've had a couple that we were waiting to release, as well as our continued coverage around the ABCDs. And we'll remind our listeners, as we do every week, to stay current. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.